Good morning, Janice.
Good morning, Anthony.
Everyone holding up okay in your household?
We are making it. We are making the most of it. You?
Well, yeah, everything's good. Everyone's healthy. That's always
Good.
good.
That's all that matters.
So let's talk a little bit about the money side of things and what to do when the markets are down because of coronavirus. So the market news is probably making you feel like or think that you've lost money just because of all the ups and downs. I don't know exactly where the market will be when this airs, but it'll probably be trending down in all likelihood.
Yeah.
Or at least from where it was a few weeks ago. But you haven't lost any money. That's simply not true, unless you sold, right? So we'll talk about that, and we'll talk specifically about how you should react depending on what stage of life you're in.
And I like that. So today we'll discuss students and kids working, those not close to retirement, working those close to retirement, and then those that are retired on a fixed income.
Cool. So let's get started. Students and kids. And by that, I mean basically anyone younger and sort of pre-career, if that makes sense.
Yes.
So if that's the stage of life you're in, or if you're the parent of folks in that stage of life, this is kind of great news. I mean, I hate to be overly, sound always glass half full, but basically for those youngsters, this is like a limited time sale of America, right?
One day only.
I mean, think about it. The American economy is not going to crash for any long term or we'll be fine eventually, right? So what the American economy, which is sort of this dynamo of world economic history, is currently on sale for 30% off. So, Janice, when you see socks or a microwave or even, an Xbox video game, I don't even know if Xbox is popular right now, but, a video game for 30% off, is that a good deal? Is that something you might jump on?
I can honestly say I don't think I've ever bought anything at full price in my life. So, yeah, free shipping, 30% off. I am totally, I'm sunk.
So that's really how you should be thinking about it. Right now is an opportunity for somebody who's young and has a lot of time to compound, to get, let's say, a slice of America, which, again, in my book, I recommend buying index funds and not any individual stocks, in an index fund theoretically representing the American economy as a whole. But everything is on sale right now. And unless you, for some reason, believe long-term we won't recover and we'll be, I don't know, in some sort of Mad Max type of world, which I don't think is going to happen long-term. It might feel like that short-term, but then yeah, this is just sort of a blip. And if you look at this moment in time on a chart 5 years from now, 10 years from now, it'll just be a squiggle, on an overall upward trend. Yeah,
absolutely. It will come back. It doesn't feel like that this very moment, but we will.
So yeah, I mean, I think that's the best framing you can put on that for youngsters who have a lot of time to compound and who don't have any expenses, or for your kids if you're saving for them. This is a good time to buy some index funds on sale. That's the best phrasing I could put on it. On sale.
Yep, on sale.
All right, next, working. So if you're talking about somebody who's working but not close to retirement, I fit into this category. Janice, do you fit into this category?
Yeah, I do.
So basically any working schlup between, early 20s and maybe late 50s, maybe if you're lucky in that range.
Yep.
So here, let me tell you a story about how I framed this. My sister-in-law gave me a call, and she asked for me, not my wife, her sister. So I was like, oh, what do you want from me?
Oh boy.
And she said, well, we were looking at our 401k and we were wondering what to do. I mean, we're getting a little freaked out, bottom line. And my first response was, why are you looking?
Yeah. Don't look.
How does that help anything? Like, I mean, if you just generally know that the market's crashing, why did you log in? And she's like, well, I just wanted to see, what's going on. I'm like, why? Are you going to do something? Are you going to sell? She's like, oh, no, that's probably a bad idea, right? I'm like, yeah, that's a horrible idea. Why would you sell to lock in your losses? Right now, it's like your house. Sometimes your home value goes up and down in the neighborhood, but you don't react to that. It's not like you're going to move and sell at a loss. You're going to keep living there, and you're going to sell when you actually need to sell. Does that make sense?
Good point. So you're not selling when you're down at the low. You're going to just keep waiting until you actually have to sell. Hopefully it's higher.
So, I mean, Janice, how often do you check the value of your home?
That's a great question. I really don't. I mean, we're going to live here, so it doesn't matter so much.
Same deal. If you're not going to sell, I mean, I'm hoping we're not talking about a situation where you've relied on your portfolio or you don't have an emergency fund, so you would have to liquidate. That would be tough. You don't want to be in that situation. But if this is your retirement account, and for my sister-in-law, it was her, I think, 401k, you're not going to sell for another, she's younger, so another 30 years. So why are you looking? You're not going to sell.
But I think it's that everybody looked, right? Last week, there was a couple weeks where everyone looked, everyone looked. And then maybe day 2, you're going, wait, this is not a good idea.
No, but that's exactly my point. Look, by human nature, it's going to just freak you out. So don't look. Right. Stop it before it gets to that point.
Exactly.
So in general, folks like us, we should just stick to our systems. I know that's painful, and this is why you should have a system in general. If your system is direct deposit from your paycheck to your 401k, or if you're self-employed like Janice and I, and you have a system where you just every month you put a little bit into your IRA, instead of waiting to April and putting it all in at once, whatever, just stick to your system through the highs and lows, because overall, on average, it'll be fine, right?
Okay.
Don't try to figure out which is the best month to put all your money in, because you know what? If you were a good market timer, you'd be rich. And you're not. So you're not. So
no. So stick with it. Okay, got it.
I mean, bottom line is, unless you're in a situation where you might actually have to sell to pay your bills, there's no reason to look. And if you're talking about 401k and IRA, you really shouldn't be. You shouldn't be in that position. Excuse me.
Okay.
Any of that not make sense? Any of that?
It does make sense. It makes a lot of sense. Just leave it and in the assumption that everything's going to come back around.
Yeah, pretty much. I mean, if the market really, 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 really crashes and we go into that Mad Max type of world, it doesn't matter if you sold, because then it'll just be pieces of toilet paper at that point.
Right.
And you'll be fighting for gasoline and weapons and food.
Toilet paper's not good, because right now that's a hot commodity. You can't even find it.
Actually, in New York, the shelves are relatively stocked again.
Are they? Okay.
Yeah, yeah. It's like the generic stuff. No more of the quilted stuff.
No more 3-ply. You're going right for 1.
But it's, at least, there's options there. It's like the generic,
right, exactly.
Dwayne Reed brand or whatever. All right. So moving on. Working but close to retirement. So I'm sorry, but this is for folks who are in this range. You're still working, but you're in your 50s or 60s. Yeah, that range. And you are planning on retiring. This is kind of the worst spot to be. Yeah. I apologize. You have my sympathies. There's just not a whole lot you can do other than, I guess the bad news is that you're probably going to have to work a few years longer than you anticipated just to kind of carry you through this downturn. And I have no opinion on how long this is going to be. I just don't think it's going to be as long or as dreadful as people might be fearing. Maybe a year or two. I don't know. But the good news is, on average, at least in the past 50 years, the U.S. has bounced back, meaning gotten back to where it was from these types of downturns on an average of 2 to 2.5 years. So, I know I know that sounds like a long time to keep working, but at least it's, it gives you a sense of how, it's not the end of the world, I guess. I hope.
Right. No, well, it's not as scary as saying, a 10-year bounce back or a 15-year bounce back. At 2.5 years, it sounds, it's better, right?
And in general, I know it's hard for any individual to plan for this, but in general, you really should try to avoid retiring in a bull market. And the reason for that is, if the market is kind of cresting or just charging upwards, and you're kind of calculating your dividends and what your portfolio will be doing for you in retirement based on these kind of almost overvalued numbers, you're bound to be in for a bit of a disappointment whether the market pulls back right out the day after you retire, or even 2 or 3 years afterwards. It's going to impact your dividend yield, basically what you're able to live off of. So maybe not such a good idea to plan or pull out or leave your job right when the market is kind of searing hot, if that makes sense.
Yes, interesting. Yep.
I know it's not always possible to just kind of make that decision based around the stock market, and it's kind of hard to know if it's super overheated or not. But to the extent that's a factor that you can take into consideration, just think about that.
Okay. Would you tell this working close to retirement the same thing as the not close? Just wait, leave it.
That's tougher. You know what? Yes, I would.
Okay.
If you're able
Okay.
to keep working for 2 to 3 years, if you're not getting laid off, I mean, if you're able to keep your job, which you should be able to, you should be age protected. Then yeah, ride it out and wait for I mean, it's going to bounce back. Like I said,
Yeah.
average
Oh.
2 to 2.5 years. I mean, if you look at even the mortgage crisis, the dot-com crisis, the recession in the early 90s, it's, 2.5 years max. You don't want to sell and lock in anything, right?
Got it. Okay.
But you shouldn't leave your job though.
No, no, no. Just stay there for a little longer.
Yeah, exactly. All right. Lastly, folks who are retired, who are actually, they were living on their investments or their fixed income. This is tough, but this is actually in some ways better than retirement. So here's how, I've gotten a lot of calls about this, and I've answered a few folks who are really freaking out and just kind of hanging on every word Jim Cramer is saying and what have you. But the bottom line is stick to your plan. If you have a solid plan, you should be fine. And I'll tell you what my plan has been and the one I wrote about in my book, and how it will work out even in a situation like this. So my plan is the 90-10 plan, which again, it flies in the face of a lot of what people are writing out there, but it's Warren Buffett's plan. So I'm pretty cool with what Warren Buffett advises me to do.
He kind of knew what he was doing.
So the 90-10 plan is to have 90% of your investments in index funds, U.S. equity index funds, probably the S&P 500, and the remaining 10% in cash or some kind of cash equivalent, just there in case of emergency. That's your break glass in case of emergency fund.
Yeah. Okay.
So if that's what you've been doing, then during the bull market, your 90% has been, just crushing it and doing really, really well, right? And you've been living off some fat dividends during that time. But that's what the 10% in cash is for times like this. So just to kind of sketch out the math a little bit, you're living off of the roughly 2% dividends on your 90%, if that makes sense, right?
Yep.
Now, you're probably not getting the dividend yield you were hoping for if the market drops 30% as it has done, right?
Right.
That's where your cash comes in, right? You make up the difference that you needed to live by diving into your cash, and you're going to deplete that. Straight up, you're going to deplete that over the next couple of years. But that 10% cash allows you to not sell at a loss.
Right. Okay.
So, if this thing lasts, if you're living off 2% dividends, you have 5 years of cash reserves. Does that make sense?
Yes.
Right. So again, assuming you've set it up so that you are budgeted to live within that, 2% dividends, your 10% cash reserve should cover you for well beyond what you need to ride this out. And only when the market recovers, and by the way, it's not a straight up, you need 2% every year and then your 10% cash will be extinguished. You're still getting some dividends. It's just not what it was when the market was higher. So this cash reserve should be good for quite a while, right? And then what'll happen is once the market starts to recover, then first of all, you should be tightening your belt a little bit, maybe, but not to the extent where, you're eating cat food or anything like that. But
right.
if you're tightening your belt, then you should be fine with your cash reserve, and you should be able to replenish that back to 10% pretty much, very shortly after the market recovers. Does that make sense?
It does.
And then at that point, you'll be back at 10% in cash, and you will have not been forced to sell a dime at a loss, right? And now you can continue with your 90% riding the recovery, basically, which is what you want to be doing.
Okay.
So, but you might at some point have to sell a little bit of capital, meaning sell a little bit of your 90% in equities. But I mean, that should be the last thing you do, and it should be, basically delay that as long as possible, because crashes tend to happen fast and recoveries happen slow. So you want to be on the upward curve before, when you're forced to sell a little bit.
It makes sense. Absolutely.
But again, you're most likely to bounce back for that. And also, anyone who's living on fixed income and is living on their dividends, just remember, those dividends are calculated and paid out usually on a quarterly basis, not on a day-by-day basis. So there's no point in you watching the daily news, the daily financial news.
Right.
So if your portfolio calculates and pays out its dividends on April 1st, which is actually right around the corner.
Tomorrow.
So then maybe you should be watching this. But if it's the middle of January, what happens between now and April 1st, in this hypothetical, has very little impact. What matters is where the market is on the day that the dividends are calculated, right? And a lot happens in between those dates. So there's really not a whole lot of point in riding that roller coaster.
So you're saying stick with the plan, just like you were saying before, just stick with it. Stick with your plan.
Yeah. And if you have a good plan, there should be no reason to sell or adjust tremendously because the plan will be built in for this situation. I mean, the adjustment is just, use some of your cash as needed.
Very interesting. Wow, these are interesting times, definitely.
Yeah, but this is where people actually end up. Whoever's selling is the one you only lose if you sell. Let's put it that way.
That makes sense. Just keep it and it will come back.
Just think of your house. You don't sell your house when the market is down. Why would you do that? You wait for it to go back up.
Right. That just makes sense.
Like, our house has gone down, in 20% in value because of whatever the housing crisis in 2008. Yeah, now's a good time to sell.
Right. Now's a good time to sell.
Let's lock in that loss. Yeah,
it's a bad decision. Right. Wow, interesting.
Yeah, I think that's all I have for today, Janice. What? Anything else?
I don't. Like I said, it's interesting times. You've referenced a few times about your book. I think this is a good time to check that out, How to Invest for Retirement. So even if you are those students and kids that are, hooray, it's on sale, this might be a really good time to read that and see what to do.
Yeah, the book is more written towards the overarching goal of just how to, implement a system towards saving for retirement. But this is an excellent time to read it to see if it makes sense during a stressful period. And I personally believe as long as you have the mental fortitude to stick to the plan and not panic, which, I know can be tough to do, but you'll see the plan works, or the systems that I outlined do work in times like this, especially in times like this.
Very interesting. It's going to be an interesting little bit, but I think we'll recover. And this is all really good information. I know a lot of people have these same questions.
Cool. Yeah. Hope you find this helpful. Janice, feel free to share with anyone who wants to hear about it or, talk about it.
Absolutely.
Yeah. Otherwise, everyone stay safe and healthy and whatnot. And we'll be back to work soon, hopefully.
Yes, hopefully.
All right.
We'll chat soon.
Thanks, Janice. Talk to you soon.
Bye-bye.
Bye now.